The Fed is freezing the housing market. Pulte sounds the alarm. Let's take a look at what's happening this week in the mortgage and real estate market. Home sales are slowing, inventory is rising, and builders as well the U.S. director of the FHFA are sounding the alarm. Pulte, a director overseeing Fannie Mae and Freddie Mac, is warning that the Federal Reserve's refusal to cut rates is crashing the market. So what's really going on here, and what happens next? The Federal Reserve has kept interest rates at a two-decade high, and Jerome Powell has made it clear, no cuts until inflation is under control. As you can see by the interest rate data for housing, it's gone up significantly since the low rates we saw in 2020. That's creating a domino effect in housing. Right now, mortgage rates are hovering around 7%, making monthly payments hundreds, sometimes thousands, more expensive than just a few years ago. Buyers are backing off. And sellers? They're frozen too, not wanting to give up their 3% mortgage. Bill Pulte didn't hold back. He said the Fed is actively hurting home sales, warning that demand is softening and the market is showing cracks. For the first time in a while, inventory is starting to rise. That's a big shift from the red-hot pandemic market, where supply was basically zero. New house inventory is also at the highest point since 2007, showing even the home builders are feeling the crunch. Builders are starting to offer major incentives, price cuts, rate buydowns, even free upgrades, just to move inventory. That's not a great sign. Pulte also shared a post on X. Pulte's right. Powell's refusal to cut rates is economic malpractice. The Fed's 4.5% rate stranglehold is crushing homebuyers, trapping owners in low-rate mortgages, and fueling a housing supply crisis. So what happens if the Fed doesn't cut rates soon? The housing market could stay frozen, or worse, we could see prices drop in areas where demand dries up. That's especially risky for recent buyers who stretched to get in at peak prices. Here's what to watch for going forward. Rate cuts. Markets are pricing in possible cuts later this year. Inventory trends. More listings equals more downward pressure. Buyer sentiment. If affordability doesn't improve, demand won't bounce back. It does not help that we are seeing more and more mass layoffs each week, it seems. If you're thinking about buying, selling, or investing, now's the time to stay sharp. The market is changing fast, and what worked last year won't work now. What do you think Jerome Powell should do? Drop a comment. Are higher rates saving us from more inflation, or making things worse? If you made it this far, don't forget to like, comment, and subscribe.